Good morning, everybody. Good morning. Good morning. Wednesday morning. This is Signet with the Bullish Bears in the day trade room. How's everybody doing this morning? So I just went over to the Benzinga 16 stocks moving in Wednesday's pre-market. There's a couple of these that are worth day trading. Some $10 stocks and less. Even a $13 one, FEYE. We've traded that one before. Uh, some bigger news coming out on a few other products. Boeing's still getting hit with some negative news. Jeffries kind of hammered down on Apple and large cap. Microsoft got an upgrade. Uh, Not a bad morning. Let's take a quick look at the futures, kind of get an idea of what the markets did last night and what we could anticipate this morning. So we are above the floor pivots on all four of the indexes. A bit of a rally off the low. If we look at the cog lines on the ES, maybe just try to clean this up a little bit so we can see what's going on. So we can see that the S&P is back to that 2911 level. This has been a major gravity point whenever price gets anywhere near it. It does exactly as named. It gravitates right to it. I did try to kind of build those same cog lines on the NASDAQ. It doesn't quite, it's not as accurate, but still gives us a bit of a heads up that cog line 7 and cog line 8 yesterday were really good warning levels. And when we got near it, price absolutely reacted to it. And we're there again today. So a bit of a pop off the lows, but not a lot of follow through. You're going to have to be watching this near the open to kind of get a glance at the AD and see where the money flow is going to go with this, so that we can get a heads up on which direction we want to take the market. Monday, the money flow divergence in the AD was a great trade signal. Yesterday, not so much. So maybe today we can get a bit of a early warning again and find a market reversal, or just see this rally continue. A little news on the rally came from the China trade talk news. So you see in trending news, this matters, right? It's the backside, it's the fundamentals behind the technicals. GM labor talks, Facebook's Lira, that's their Bitcoin. Let's see. There was some talk about
Morning, guys.
the tariffs, and that's kind of what I want to focus on here for a moment. I gotta mute this room here real quick. All right. So that's kind of what we're looking at. Uh, the news wasn't really great. It was just pretty much a bit of a equalizer, trying to balance the talk from yesterday with the negative perspective. So a lot of what I was seeing from Bloomberg and Seeking Alpha was um, tariff talk, more on the idea that investor sentiment was coming up. Right. So if we scroll into like Benzinga and Barron's, China's auto market, a little bit of marijuana talk. Pilots are still suing Boeing. Ally Financial downgraded. Now, here's a little bit of that China talk. The blacklist from yesterday, so this is 10/9/2019. Yesterday on 10/8, there was 8 or 9 companies blacklisted that kind of set the negotiations back. They considered that a hostile action, and they promised retaliation. The market did not like that at all. Now, I know as As I scroll through here, I'm not going to read through all these, but there was talk about investor sentiment was turning positive this morning, which is why we started to see that rally off the lows. Yep, Dow set for a higher open as the U.S.-China trade deal hopes rise, and that was, a while back. 6:45 this morning, so it's been a little while, but um, that was the little pop. And then after that pop, the market just kind of slid sideways. Now, we do have some economic news today, and Jerome Powell will be speaking, but we got to take that into perspective, right? Um, just because he's speaking doesn't necessarily mean anything. So, what we want to look at is the Thinkorswim calendar. The way we find that is we jump over here to Market Watch, go to calendar, and just turn everything off. Come down to Econoday event, and you can see FOMC minutes. Now, this is the minutes from last week's meeting. This isn't going to be anything new. The only thing that they're doing here is they're trying to explain why they made the decision that they made. So reading it is absolutely going to be a good thing if you want some perspective on why they make the kind of decisions that they make. But this decision has already been made and it's already been priced into the market. That doesn't mean that it won't cause a reaction in the marketplace, though. It absolutely could. Anytime you see anything to do with Jerome Powell or the market, you want to pay close attention. And then you can see here at 11 a.m., Federal Reserve Chairman Jerome Powell speech. He's going to host a roundtable with the Kansas City Fed president, and they're going to discuss labor market conditions, local banking, and other topics. This shouldn't, quote, shouldn't affect the market that badly. But if he gets asked a question from a reporter and he doesn't answer it in a way that the market likes, we could see some serious reactions, which is why we always want to be very careful whenever the Fed is out in public. Because even a non voting member of the Fed just having a lunch can say something to a reporter and tip the market over. I know because I've seen it happen back in May when a subtle, very subtle hint that a interest rate cut could be coming, the market exploded to the upside and pulled us out of a strong downturn. And it was on accident, right? So there you go. That's how you find it, and you can scroll down in here. Thinkorswim does a pretty decent job of kind of telling you what it is and how badly it can affect you. If when you see the job numbers, uh, it actually says in there that it's one of the most um, effective market events, right? So it gives you a pretty good heads up of how much it's going to affect you. There are a lot of economic events that doesn't bother us at all, right? And then there's others that can be very volatile. So knowing the difference between the two, at least getting a heads up, can help a lot. So the JOLTS comes out in an hour. That would be uh, 8 o'clock, 9 o'clock my time. That's going to cause a little bit of reaction. So that's kind of where we're sitting at this morning. That we're off the lows. We had a bit of a pop over sentiment and only over sentiment. And now we're going to just start taking a look at the penny stocks for the day. Now, in the Benzinga list, that the 16 that are moving in the pre-market, you can see quite a few of these are not going to be things that we would trade with penny stocks, right? Um, Roku's just too expensive for something like that. But we got quite a bit of products here. 16, well, 15 because one I took off the list. These were the ones moving in the pre-market, and then Dan posted uh, the gap list, I believe, Looking through the Twitter feed right now for Dan. That way we can see the gapper list. Doo-doo-doo. Not seeing Dan's post. There it is. So we got OCGN, MBT, Roku, NIO, SDC. Just kind of add a few of these to the list. These are the gappers. Those are the leading gappers. OCGN, MBT, Roku, NIO, and SDC. So a few more there on the list. That kind of balances us out a little bit. Gives us something a little more tradable cost-wise. Quite a few technical alerts on swing trade bots, pocket pivots, 52-week closing high, and 20 DMA support are a few of my favorites. MACD bullish sign, not quite as excited about that. Break below 20 is a good one. TDY did that. I'm going to add that to the list. It broke below its 20-day, let's see, 200-day DMA resistance. That's always a good one. UAL did that. AIG lower Bollinger Band walk. Yes, we will take that. All right. That's a good start. Just seen a shout out in the trade room by Big Bear that AOBC had an upgrade. Where did that go? AOBC. Yeah, nice pop in the pre-market. It's going to run right up into this shelf here. Target on that. If we can get a good 50 cents, that'd be all right. But it's had a heck of a move already. All right. So we're going to be doing these live streams in the morning. Depending on who's doing the stream, you know, we're looking to do a bit of a pre-market inspection, and then depending on who's streaming, we're looking to stream for the first 30 to 45 minutes of the market open, and then we're going to kill the streams. So don't be surprised if I kill this at around 10 o'clock. You can come over to the Bullish Bears community and sign up for the free trial and kind of take a look around. We've got a ton of educational content, options, futures, day trade, swing trade, day swing trades. We've got blog posts, videos, just about anything connected to the marketplace. We have focused on it. And then, of course, we've got trade ideas, gap scanners. There's the swing trade room, a day trade room. We focus on just about everything you could have an interest in. And if we don't cover something that you're interested in, giving a shout out would get it on our radar. And then we could, of course, put that into what we focus on. That way you get what you're looking for. So take the opportunity to come by the Bullish Bears website. You can find it on Google, and you just Google the Bullish Bears. We have our own webpage. Come on over, sign up for the free trial, or just sign up. I've been a member of the community for about a year now, and it changed everything about the way I trade. I don't think I would be as successful as I am today without having joined the Bullish Bears. And, you know, to me, that's what matters. My growth is absolutely the first thing that I focus on. One quick scan here for some pre-market moves. Should be able to find some pre-market. Gap ups, gap downs. We'll just do some market maker moves. We don't want all stocks. We want things with weeklies. And with the market maker moves, that took 10 off. And then we need to adjust for price. Say $20. That's fair. Those are not $20 stocks. No matching symbols. Things making all-time highs. Nope. All right, give me a moment. I'm going to flip over to the room now. You're probably going to hear Dan talking.
Stop signs, roadblocks, things of that nature up ahead. So I will check TrendSpider on all these charts, right? So to go back to Roku, I think I started with Roku or SPY. There's a big daily trend line breakout. So back testing this would be normal, completely normal. Look to go long there, back inside here, we're back to the 9 EMA daily. So I'm going to have a bullish trade and a bearish trade loaded on Roku because it's too sweet. There's so much volume and good price action with this one. We'll just trade it. Morning, Sig. All right, I'm going to hand it over to Sig. I just wanted to come chat with you guys for a little bit, do some pre-market stuff, and I'll be in here with you guys trying to look for a way to scalp a couple bucks today, maybe play some swing trades. I've been super apprehensive with my swing trades. As you guys probably noticed with the private Twitter, it's just been so choppy and indecisive that you got to swing trade for a day and then you got to close it. So I sold calls on SPY and a bear call spread and closed it yesterday. And I'm glad I did because look at the gap up, and that's the thing. And it's just too fast. So I'll touch base with you guys all later.
Good morning, everybody. I'm hoping this morning that I get an opportunity to demonstrate what happened Monday. It was great. So if you haven't seen me do it before, I go into Market Watch and I keep track of the indexes within the first 30 minutes or so. I go in here watching the S&P, watch the Nasdaq, the Dow. Monday, when the market opened and immediately started to fall, I was sitting in here looking at the declining and advancing issues, and we had some really great divergence in the money flow. So there was 90 stocks moving to the downside, 10 moving to the upside, but the money was running in strong. I'm getting some audio alert issues here, so let me get a reboot and I'll be right back. All right, so we'll try that again. Been having audio bridge issues. Not quite sure why. So what I was saying was Monday we had some beautiful positive divergence in the marketplace, and we spotted it right at the bell, followed it through the first 45 minutes, and it offers some really great trade opportunities. That was Monday. Yesterday we didn't see it, but I'm hoping to see it this morning so we can give a shout out and get it live. Um, by the way, let me get an audio check. I just reset everything. See if you guys can hear me. You still can't hear me. That's great.
Now we can.
Oh, okay. Good deal. Good deal.
Can you hit the record button? I just shut it off. I don't know if that was causing the issue or not.
I
Sweet. There you
just
go.
clicked it again, so I am recording it now. Been having audio bridge issues. I don't know what in both rooms. It's not just in the day trade room, but either way, it's not live. It's Memorex back again. So what I'm looking at here, guys, this is the advanced decline line, and the reason I'm bringing this up is because when we're sitting waiting for price discovery at the bell, the first 10, 15 minutes, instead of just staring at the charts, you can go in here and you can get actionable trade ideas. Monday, there was money flow divergence in here, and I called it out. I was taking pictures, posting it in the room. The negative declining issues was say 75%. So 75% of the S&P 100 was moving down, but the money coming in, the advancing money flow was massive. It was a really big heads up flashing light saying this market was going to turn around, and it did. It faded at the bell, stabilized, found support, and ripped to the upside, and took some calls on the Qs and the Nasdaq, or on the Russell, the Nasdaq, and the SPY, and nailed every single one of them. It was great. It was a perfect. Yesterday we didn't get that opportunity. There was no divergence. Um, with the little bit of a pop that we had here this morning because of the investor sentiment changing on the China trade talk, I'm hoping to see some divergence here again, maybe get another opportunity. I do got a few stocks in the list. Some of these are a bit pricey, options, but most of them are well within our price range to day trade. And a lot of these came from Benzinga. I'm always interested in things we can get for free. Benzinga is on Twitter. They post 16 stocks moving in the pre-market, and if you click the link, it brings you here. The nice thing about it is you can see why did it pop. It's got a little bit of a news, right? It'll just kind of tell you what's going on and why there was a pop. It's 16 markets. It's not overwhelming, right? And then Dan also tweets quite often in the morning, and you can find it on Stock Twists and other places. Dan did the gap in the pre-market, so you can get your trade ideas. We can't watch too many of them at once, so the idea is go through the list. Out of these 16, some of them are going to be too expensive, like Roku or whatever. Whittle it down, and then take the time to draw out your support and resistance lines. Identify some trade setups. Understand why it's moving. Get a little background on it, and that way you're ready to go at the bell. Right? You got to like free. I like free. So then let's see what kind of news. Bio stock is something I like to hit because it's priced right, and banks are priced right. Johnson and Johnson had a little bit of a news. Johnson's a bit expensive, but it's got a lot of news. And the reason it's important to look at something like Johnson and Johnson is because of correlation. Biotech can move because big names like Johnson and Johnson moves. So if this is positive and gets some correlation with some cheaper markets, that'll also carry us up. It just offers trade ideas. SRPT had news this morning. Johnson and Johnson, AVXL, and EYEG. Like I said, a couple of good ones on there. Don't forget about the FOMC. You can go to Market Watch calendar and just turn everything off except for Econo Day event. So once you're here, you can click on it and it'll tell you what is going to be talked about. So, like, Jerome Powell is going to be talking at 11 o'clock today. He's having a roundtable session with the Kansas City Fed president, and they're going to talk about labor conditions, local banking, blah, blah, blah. That's not really a heads up, right? But the problem is anytime a Fed member, even a non-voting Fed member, whenever they're in public and there's going to be reporters around, if they answer a question the wrong way, it can flip the market. I know because back in May, a non-voting member of the Fed had lunch, answered a reporter's question in a way that implied that there could be a rate cut, and the market exploded out of a downturn that it had been in for a whole week, and it rallied for the next 2 days based off of a backhanded comment. So whenever you see there's going to be Fed members speaking, you want to have uh, that heads up and get out of your positions before they get to answering any questions by the public. That's how you find that information. I don't know why the 18th in October is blacked out. Are you talking about right here on the, like the left side of my calendar? The 18th, it really isn't blacked out. I don't, oh, third Friday of the week of the month. It's probably like a triple witching, or there you go. It's a holiday, right? I don't know. Not quite for sure. Equity settlements would be my guess. Third Friday of the month. You can test that theory by jumping over another month. Go to November. 1 Friday, 2 Fridays, 3 Fridays. It's the third Friday of the month. That's why it's blacked out. December, 1, 2, 3. Ah, you like it. That's how we figure things out. All right, so what else we got? There's a couple more gappers. Here's a list for you: IRBT, AOBC, MPWR. I don't have that one on my list. MPWR. VIE. So we got a pretty good list this morning. We'll start to whittle it down as we go. I would say that the 18th is blacked out because it's the third Friday of the month, guys. That's why. If you jump through the calendar and you look at every single month, the third Friday is blacked out. And then if you go into trades and you look at the options, and we go look at the 18th, 2-minute warning, by the way, 2-minute warning. You can see that that's the monthly expiration for the options, right? So that's kind of a little bit of a heads up. Thinkorswim has a ton of features, and some of them are really subtle, like that one. That little black box shading out the 18th. USO and SPY and X Steel are always something that I look at. And if you traded them this week, you had some really good opportunities. Sirius XM is another one that I like to keep my eye on a day-to-day basis. And it also presented some really good trade opportunities. They're like in sync. If you see oil getting positive news, you could go in and trade X just as easily as you could trade USO because X will move in correlation with it. And they're cheaper markets. You don't have to break the bank or sell the farm to get into something like that. Sirius XM fading pretty hard from its Globex. And there is the bell. All right, so we're going to let this kind of settle out, give it a good 5 or 10 minutes to neutralize itself, get some price discovery. There's the 9th. Jump over to visualize the S&P green on the screen. But notice all these green dashes here. That's everything that's pulled off of their highs. We do have a red Johnson & Johnson getting hammered to the downside. Money flow, there is no divergence in here. We have got a strong positive market in the S&P. So jump over. If this is unfamiliar to you, try starting out with something that only has 30 markets in it. That'd be the Dow. Learning about market cap takes you right to the Dow. It's kind of the first thing that it's the easiest thing to learn. The biggest names in the marketplace, the mega cap stocks, are in the Dow. Of course, Apple is the top dog on the list, followed by Microsoft. Those two together can completely wipe the marketplace or carry us higher like it did for last Friday. There's sometimes the question, kind of the chicken and the egg question, which came first? So do the futures move the markets or do the markets move the futures? The answer is yes, both. Sometimes the markets, like Apple and Microsoft, push the futures and move the market. Sometimes the futures move the markets. So it's not always one and it's not always the other one. That's right. And a tweet can move everything. So what I'm looking for in here, the Dow does make it really easy. You know, there's 30 stocks, 28 are advancing. The money flow is really strong to the upside. I'm seeing no divergence here. This market should run strong. Now on Wednesdays, one of the things I like to do is go over to the finances, XLF. It's got a really high gamma load on Thursdays and Fridays especially, but sometimes you can start to find it on Wednesdays. And you can scan for gamma too. I know we're going to focus more on shares here in a moment, but real quick option talk. We'll just get geek for a minute. When you've got a gamma load on Thursdays and Fridays of $1.50, $1.75, $2.50, and even up to $3 gamma load on XLF on Fridays, you don't need much of a move to hit 200, 300, or 400% profit, and you only have to risk $5, $10, $15 to do that, right? So XLF is my play to do those kind of trades. It's right at a strike price right now. So, you know, taking a $23 call, uh, even for a day trade, could turn out to be a pretty decent opportunity. And you got a 70-cent gamma load with a 50 delta. 50-cent move in this market would give you 100% profit. Your $23 call could be sold for pretty close to $60. So, you know, opportunities abound. Looks like oil and steel taking a bit of a fade. So come over to the sectors. This is not the sectors. That one's broke. So while we're waiting for the price discovery, take a look at the 9 sectors to see what could be holding us back. Now, with all that green on the screen, I don't think that we're going to see a lot holding us back. But got to try to get a heads up. XLF fading at the open, and energy also. So that's finance and energy. Industrials are weak and fading. As day traders, you really want to keep your eye on the Russell. The S&P gets a lot of attention, but as day traders, small cap stocks reside in the Russell more than anywhere else, and most of what you're going to trade is going to be in that index. So that, getting that heads up. We're getting some negative market. Let's take a look. Maybe we can find out why. Surely Johnson & Johnson ain't big enough by itself to make that kind of move in the marketplace. Verizon is another one moving down. I've seen some weakness in tech, so we can jump over to NASDAQ. We are starting to get some negative, but look at this. Activision was down almost 1.5%. It's way off of its lows. It's about to break zero for the day. And Netflix off its lows, but not by much. With the markets pulling back, a lot of people might be thinking, we're getting a reversal and this market's going to turn around and start heading to the downside. The money's not showing that yet. It's not showing that yet at all. The divergence that I was talking about a little while ago on Monday that was bullish will work in reverse as well. If the market wants to start turning to the downside, we should see the money flow divergence first. Yeah, it's very rare to see X steel hard to borrow. EMW was discussing that in the trade room. Got a bit of a news on target for any of you people that trade options. EU's Juncker and Barnier speak live in Brussels today, so a bit of a heads up there. AT&T had news about their Puerto Rico division, by the way. So if that's not on your radar, I know it's a bit pricey. What else we got here in the news? Anybody got anything you want to look at? I did see Plug mentioned earlier. It broke that support level from yesterday's close, and it looks to be pushing strong to the downside. Question is it a pullback or is it a change in market sentiment? So we throw out the fib line. Needs to hold that yellow line you see on the screen. That's the 618. A pullback to that would just be a real nice entry. A break below that level would tell me that this uptrend is no longer intact, and we would need to see a new trend form. Even a bullish trend, still a new trend. Let's see if we can do this. Thinkorswim has some really great features that can make things real easy when they work. So you can load an entire watch list all at once. Wednesday streams. Just like that. Let's get these priced right so that we're not watching. We got a lot of green, some really good trades setting up. We've had 10 minutes. That's more than enough. NIO looks to be stabilizing around that $1.60 range. National Oil Well. If that's moving, then so will X Steel and USO and Halliburton. Got a shout out on Snap. Oh, Snap. Can't help it. Every time I hear that, that's the first thing I think of. So we've got some pretty decent markets to trade today in our price range. Dan is absolutely right. If you don't see the chat and you're just hearing me talk, Dan said that we are still in ranges. And if you look at what's on the screen here, uh, we are range bound in a lot of these markets. Now, EURN popped in the pre-market a good 30 cents. That's almost 4% on that small of a market. It set a new high a day, pulled back just slightly. So if you're looking for some trade opportunities, that one is setting up. PLUG set a low at that 618 and has rallied back up off of it. The tankers, NAT, wicked down to 3.5 and then rallied up a good 30 cents off of that to 383. So we got some opportunities coming in. NIO looks pretty strong. If you look left on NIO to yesterday's price action, that's where it found support. Green on the screen. You could almost throw a dart. Anything that you hit looks to be running bullish. Flip back over to the market watch real quick. Seeing no divergence at all. The market's just green. That's it. Now, since we're trading more of the Russell than anything else, we can always jump over and look at the Russell indexes. There's your consumer discretionary. The one sector in the Russell that's down or red is the utilities markets that are in the Russell. And the one doing the best, it was up 1.5%, is energy. So energy stocks in the Russell, your small cap energy stocks, strong to the upside. Everything's looking good. Out of the four indexes, the Russell doesn't have a 100, but it does have a 1,000. Kind of narrow things down a little bit. We've got 90% of the Russell moving to the upside. Money flows looking really good. We can take a peek at the cumulative tick. We've got positive market sync, and we are in accumulation phase. We are above the zero line. Notice that sharp decline right there. As I was speaking, the S&P broke below distribution and is broke below the zero line, and it's in distribution. EU news, they're talking about a possibility of an extension on the Brexit. And there are options listing, some new ones, and then some delistings. Alibaba? Oh no, that's not Alibaba. AABA is going to get delisted. Had a shout out in the room for AOBC, which is up over 10% today. OCGN is up over 25% today. American Outdoor Brands got hammered a while back. You can see this has just been a trending down market. Every time you go to the daily charts, imagine what SPY looks like and just lay it right over the top of that. What did SPY do last year? It crashed right before Christmas, rallied up off of that, and all the way into March, it rallied to the upside. Now, with that in mind, look at American Outdoor Brands, AOBC. It did not have that rally on the year, and it's down quite a bit on the year. The pop today could be nothing more than a floating island. It's a candle pattern you can learn more about. This move to the upside, looking left, has some serious resistance at the $7 range. So if you're looking to play this, be very cautious. The sellers step in every time it gets around that range. Dan's giving a call out for a bear flag on Roku. Didn't give a time frame. OCGN 23% between the pre-market and the Globex, dumping back down to that 155 range. This needs to hold this. I don't know that we're going to get it to hold or not, but it's testing that open range low. What else do we got? Not seeing any block sweeps or anything like that coming through. iRobot news again, which is probably why we were getting such a move in iRobot this morning. Got a shout out on BBW. Wicked up to 383, faded back down a good 10 cents. Build-A-Bear Workshop. I never heard of such a thing. But it's up 4% on the day. Careful with this. It's low volume. Nothing from Black Box Stocks on the Twitter, and nothing from Cheddar Flow either. So the JOLTS numbers are coming out in 11 minutes. Call it 10 minutes. We also have wholesale trade, and between those two, we absolutely could see a market reaction. Now, for me, I would want to look at anything in the XLI, the industrial sector. But consumer discretionary can offer up some really good trade ideas too. That Walmart, Target, Walgreens, and even American Outdoor Brands, any kind of retail or resale marketplace could offer you a trade opportunity after the news comes out. Notice the bonds got hit really hard, and they're trying to form a base here, looking left. The keeping an eye on the bonds is it's not going to say it's critical, but it can really give you that heads up. We've done quite a bit of posts between me, Angel, Creed. I believe Dan has done some, and maybe even Lucien. So if you go to the Bullish Bears YouTube and type in sectors, you should find it. You can also go to the website. So, like BlackRock creates their own sector ETFs, Vanguard has their own sector ETFs, and Spider has theirs. So, SPDRS. There's an app that you can get for your phone, and then there's also the website. From the website, you can learn about sector rotation. You can learn about how these sectors interact with each other, and you can learn how to use these sectors in your trading. So you can go to this one, and there's another one just as good. I believe it's this one. And then, of course, they've got sectors for dummies. I don't like any book that calls me a dummy, but I've used dummy books for everything from engineering to Microsoft to Excel and even into trading with sectors. So, you know, Google is your friend. Learning what the sectors are, how you can use them in your trading will change the way you look at the market and change the way you trade it. So those three, if you're new to sectors, would be what you want to look at. BlackRock, Vanguard, and Spiders. They're pretty much all the same. I would recommend picking one. Don't try to watch all three. And be careful on which ones you want to trade, because even though I will watch certain sectors from, say, Vanguard or BlackRock, they're not as liquid as Spider, and some of them are, some of them aren't. So I won't trade necessarily a Vanguard ETF or a BlackRock ETF as as quickly as I would trade a Spider ETF. Doesn't mean you can't watch them though, especially since they'll break down more than just these 9. There's actually 11 that are really useful, but just the 9 are good enough for me. If you go back into visualize, you click on watch list, scroll down, you can see the S&P sector indices. There's the 11. Just pause your mouse on whatever it is you want to. This one is the communication sector. It's the one that's flat on the day. The one doing the best, better. It's the energy sector, followed by information and materials. Materials leads me back to XLI, or XLB for materials. You can't learn it all at once, guys. Just, little bites of the apple. And don't even get me started on VIX products. Just realize that the VIX product you trade, depending on which one you choose to trade, will take more buying power or buying power reduction than others will. And you always want to make sure that you're not looking at anything double or triple leveraged unless that's exactly what you're trying to trade. So the VIX is pushing to the upside. Let's see what the volatility is. We can't put the implied volatility indicator onto the VIX. right? So if you want to know what the volatility of the VIX is, you go to the VVIX. Um, why is that important? Well, if you think of SPY, and it has implied volatility, when SPY rises, volatility falls. It takes value out of your options. When you're trading the VIX, if you can see the volume or the implied volatility, it should go down as the VIX goes up. And as you can see here, it did not. It went up as the VIX went up. There's a warning in that, but we're going to focus more on shares and not options. So I'm going to get out of that. I have that is almost a 6% move to the downside. Creed went long with SPY puts. Looking at X from, what is that, Monday? It broke through that level like it wasn't even there. Take X still out onto the daily, kind of get a bit of an idea of what we're looking at here. X still is within its lower range. 1016 would be where we would anticipate finding some serious support. A break below that could be a really good trade opportunity. I think everybody might pile on for the ride at that point. Dan did us a favor of giving us a heads up on the data. 4 minutes. 4-minute warning, people. So if you're looking at X Steel here on the daily, we can count back. We broke out of the range that we have been in for the last 4 days. And this is still pushing to the downside. Very close to 7% negative. If X Steel is falling, USO should be in tow. It gapped up and now it's falling, and it's not falling very hard. It's still showing that it's up 2%, even though it is down since it opened. And it found support already. So it lost its correlation with oil, or with steel. Taking a peek at the media, looking for news. For me, I get my news from Live Squawk. It is the Twitter feed that I watch more than anything else, and that's because it's very, very short and sweet, and the guy doesn't bomb me with ads and anything like that. Live Squawk, absolutely the greatest news for economic news, FOMC announcements, anything that could wobble the market. That person right there does a really good job of posting it and does it timely. All right. So what can we take off? OCGN is testing that pre-market low. So that's definitely on the list. NIO and X Steel are both short opportunities. This thing is amazing move to the downside. As a new trader, there's a lot of products that that I didn't have a chance to trade when they started, but this is one of them. I remember this was one of the first IPO trades that I ever took. Um, I really had a lot of fun with this when it first came out. So looking left on NIO, you can see the participation increased. If I was to turn on the volume right now, you could see that when we broke this level here, yesterday's lows, it increased. The participation increased. Right now it's struggling. The buyers are trying to step in and hold this up, but there's not enough of them, I don't think. So there's your increase in volume, spiking up above 1 million. Oh yeah, X Steel, and believe it or not, Sirius XM offers everyday trading opportunities. USO, there's a few that are on my favorites list that always give a chance to trade, and that even junk JC Penney's last November and December offered a couple. But you gotta watch for your opportunities. I mean, look at JC Penney's on Monday. Really good trade opportunity. And the thing is dirt cheap. But to sit there all day long staring at it, and by the way, JCPenney's is breaking its support levels, and it's going to come down and test the open range low. Really cheap, and I've traded it more than once. It's a good one. Take this back to NIO. U.S. wholesale inventories. 2% estimated was 4%. Previous was 4%. Wholesale trade sales 0.0. Previous was 0.2. U.S. JOLTS job openings 70.51. Estimated was 72.50. Previous was 71.74. That's negative, guys. So heads up. If you're like me, you need to see it instead of hear it. So I posted that in the day trade room. That way you can see it instead of hearing it. Looking at everything on my list that we've been discussing, ALBC testing the highs, not the high a day, just testing its highs. MBT also back up to the top of its range. EURN, JMIA is forming a wedge. It's compressing, it's getting ready to make a move. FEYE has come back down to test the lows, and so has NAT. So the trade setups are coming into play. Then the job number or the JOLTS numbers did not rock the marketplace. You can see here's the indexes. Um, the algorithms are faster than me. By the time I even got done reading all of that, the algorithms would have already adapted their trades. We don't see anything in here. So there could be a delayed reaction a little bit, some absorption in the marketplace, but I'm not seeing uh, any major reaction to those numbers. I think the market is going to shrug those negative numbers off. And, this is the way it goes sometimes, guys. Um, there's this survey that comes out that normally doesn't affect us, and yet every once in a while it will, and the market will just explode because of it. And here with the jolt numbers, those were negative numbers, and the market just seemed to shrug it off like it didn't even care. Right? So that's why we just want to know when those things are going to happen so we can anticipate a reaction, but we didn't get one. That's not necessarily a bad thing. Maybe now we'll get a little bit of a volume, but Dan did also mention, and it's a good thing to keep in mind, we still got POW coming up, right? So the lack of market participation could be because of that. You should be able to tell if the algorithms are trading just from the explosive move in the market. So let's say it was bad numbers. You would see the algorithms kick in on tech. You would see tech instantly start moving in correlation across 5 of the mega cap stocks at least, probably the first 15 on the list, right? And the same for banks or credit. When the algos kick in, things will start moving in sync in a way that you can't miss. Oftentimes when I post pictures, I'll post things multiples like MasterCard, Visa, American Express, 3. And then I'll jump to Bank of Mellon, Bank of America, and Goldman Sachs, 3. And you can see when the algos kick in because they'll all 3 instantly start trading in sync. That's one thing. You can learn a lot from the white papers as well. If you've never done it before, you can go to Google Scholar. Google is not a bad search engine, but there's a Google Scholar that looks at white papers. Um, Case laws, articles, colleges, doctors, research papers, you name it, it's in here. You can learn about sectors, high frequency trading, algorithms, off exchanges, dark pools, icebergs. It's all in there, plus some. Anything in the world that you could search for, you can find scientific articles for it, and you can learn a lot. You can geek out in there all day long. I do. I get lost, fall down the rabbit hole, and get to looking at all kinds of stuff. I also use Google search for my college studies. It's not as good as my library, it's just easier to access than my college library. NIO looks to have found a little bit of support at yesterday's low. So if this starts to build a base, might find a trade opportunity there. It did wick below it. The buyer stepped in and brought it back up. I'm going to keep my eye on this one for a trade opportunity. So Snap gave us a pretty ugly chart this morning. It did set a low at right at that $14 range. We're getting a bit of a pullback now. Let's move that up just a little bit more to pre-market. So looking at Snap, we could end up range bound, but I need to see this break the 618, hold above it. It broke it, but it couldn't hold. So that's the range I'm looking at there, $14.16 to $14. Yeah, hunting, I have a bad habit of talking to everybody in the way that I think instead of the way that they think. So if I say things that get you lost, feel free to ask in the room because I seriously lose track, and then I say things that kind of go over people's heads. It's just a language barrier. But we can work on it. If you point out something if I'm talking about something that you haven't covered yet and you want to know more about it or just want to know where to look, uh, by all means, speak up so that I know and I can help you, point you in the right direction. Johnson & Johnson still down on the day. It did cross that 1.5% negative side. Verizon also down on the day. I've done quite a few videos on volatility. Um, One of the best videos for volatility that I could point you to is on the Bullish Bears website. I did a video on the VVS, the VIX volatility spread, and in that video I took a lot of time talking about volatility all by itself before I ever got to the trade so that people could understand kind of the edge that we have in the trade. So I did 2 videos. The VVS needed 2 videos because I needed to kind of do a real good background on it. So the VIX volatility spread part 1 is really just all about volatility. And then I covered quite a bit of volatility in the risk twist spread as well, but this one would do you better. Probably going to need to watch that more than once. Um, I kind of jumped in there pretty deep. And then anytime you're on YouTube, if you add the words bullish bears to the front of your search, it will help you find our content. So for an example, if you want to learn more about volatility, you type in bullish bears, volatility, and then you get our videos popping up. Right? If it says that it's from 2 years ago, that's not me. Even 11 months ago, probably not me. This might be me. Absolutely. So we're going to look at the sectors. First thing to do is just jump over to what Thinkorswim is looking at for the sectors. All 11 sectors are popping, but the strong ones are tech, energy, materials, and financials. Now, to put that into terms that make sense, financials is XLF, materials XLB, industrials XLI, consumer staples, which was not on the list, XLP. So the four that get the most attention, XLF, XLK, that's your finance, technology, and then energy, XLE, and healthcare. Those four get the most attention. When you're on Market Watch, you want to just pause your mouse because these don't mean anything to me, right? I don't understand $1 SP 500 number 10. But if you stop your mouse there and you look to the right, S&P 500 energy sector, it tells you, right? And so you can pause your mouse, say right where I paused, it's number 45. That's S&P 500 information technology sector because I look to the right. And the reason you want to jump in here first is you want to see what the volume is, what the capital flow is, and is there anything negative, right? Because we're only looking at 9, and Thinkorswim is showing us all 11, right? So kind of get a bit of a heads up that way. So when I see a market rally, the first thing I do is I go to the sectors and I ask what is causing this rally. Is it enough to carry us? Nope. XLE is energy, which makes sense, right? XLE, energy. XLF is finance. F for finance, E for energy. K is misleading, but it's tech. XLK is tech. And XLY and XLP are both consumer discretionary, but one is frivolous spending and one is household spending. So the one in the lower left, these three on the bottom are defensive sectors. This is going to kind of help you out on your tech stuff. The defensive sectors is where money would flow in a uncertain marketplace or in a bearish marketplace. It's where people want to go when they're defensive on the market. So consumer staples or consumer spending, which would be your Campbell's soup and that kind of toilet paper, bourbon, cigarettes. People are going to buy that stuff in a good market and a bad market. People are going to buy healthcare. There doesn't matter what the market looks like. They need their healthcare and they need their utilities, right? Even when the economy is bad, people are still going to run the air conditioner. They're still going to run the heater. So there's your defensive. What's missing out of here are the REITs, right? The real estate. It's not in here. That's also a defensive sector. Then you got your midline. This would also be where money would flow in a good economy and in a bad economy, right? It's midline, it can go either direction. So you've got your industrials. Think of the industrials like the kitchen drawer where you throw everything that just doesn't have a place. Airlines, shipping, rails, it's all in there plus some. And then materials, that'd be your construction materials. And energy. Energy is a really broad, wide market. Is that energy exploration, energy production? Is it um, is it where the rigs are at? Is it drilling? So it can be a lot of those plus some. And then the top ones are completely offensive markets. The frivolous spending, that would be your resort hotels and cruise liners, tech, and finance. Now, finance is misleading because if you think about finance, you might only be thinking about banks, but there's also government bonds, government debt, and then there's credit. So your credit cards versus your credit lending institutions. And one great way to see visually what that would look like is go to something like Visa. If Visa is popping, then MasterCard should be popping, and perhaps even uh, Capital One popping. So that's three credit cards, as opposed to what? Goldman Sachs, also doing good. Wells Fargo, doing good. And say Bank of America, since it's one that I love to day trade. So three banks, three credit cards. If the banks are moving up and the credit cards are not, then you've got divergence in finance. When you get all of finance moving to the upside at the same time, don't bother trying to chase those. Just go in and trade XLF. But XLF doesn't have a very large ATR. It doesn't move a lot, right? It moves more in the after hours than it does in the daytime. So if you're going to trade this, you want to make sure that a lot of finance is moving in sync, which means you want to see the banks and the credit cards both bullish or both bearish. You don't want divergence in those and then try to trade this. It doesn't really work out too good. But then you can start getting into um, bonds like TLT. And whenever you think of bonds, just think of government debt. There's trillions and trillions and trillions of dollars of government debt, and there's only billions and billions of dollars in banks. Toilet paper and bourbon always run together. Think of the household goods that you never want to run out of. Toilet paper, bourbon, cigarettes. They all they all are going to be bought even in a bad market. People are still going to use those things. Absolutely, you got to add peanut butter and coffee to the list. So when it comes to bonds, we could just like do an hours on bonds and government debt and treasury and interest rates. We don't really have the time in this format to do that, but I now have a video idea, right? So that'll give me something to focus on for uh, for a weekend video, kind of flesh that out more. And I know that Tasty Trades kind of blew my mind on that. I used to think that when the bonds moved up, that finance would move down or that the market would move down. They don't always run inverse of each other. Through cycles of years, sometimes they all move in sync and sometimes they move inverse. So it's not set in stone that when the bonds fall, the markets rise. That's not true. You can find that on Tasty Trades YouTube. This right here, I've shared it multiple times, and I think it's actually in the room drive, but I'll just share it right now so you don't have to go hunting for it. Oh, don't worry. don't ever worry about asking. So the one thing I'll mention about that page that I just shared is this one cell right here. I've got it loaded with an indicator. So even though it says it's looking at the VIX futures, it's not showing you the VIX futures. Price-wise it is, but there's no candles here. I have it turned off, right? And instead I told it to just show me the indicator, no candles. You can change that to something else if you want to. I found it very useful to just leave it in there so I can see money-wise what's going on in the VIX futures. Are they up for the day? Are they down for the day? We've got unusual options activity for you options traders, NVIDIA and FXI. So looking at this, this is the cumulative tick. You can see that the market is running in sync. We've only had one red dot. We've got more green dots than white dots. So the market is moving more in sync than it is divergent. This study, since I shared the chart, you got the study with it. It's cumulative tick. It's watching the NASDAQ, the S&P, the Russell, and the New York Stock Exchange. It's watching all four of their cumulative tick, measuring that together. The heads up would be if you see the Russell cut strongly and sharply across these other two markets, and the S&P never really ranges too far from zero. If you see the S&P around 2000, we're having a really good or a really bad day. Set that to one time frame and stick with it. I like the 5 minute, some people like the 1 minute. Doesn't matter which one, just don't change back and forth. You can't get good analysis if you change your time frames back and forth. You want to just pick one. We're getting our rally back in the tech, followed with finance. So that would be the Russell for finance, the NASDAQ for tech, and the S&P would probably pretty much lump everything else. But we don't have sync. Utilities are down, energy's down. Consumer discretionary is trying to give us a little bit of love. We're just not getting any follow through. See what markets we have for trade opportunities. I've been thinking about doing a what to watch and why video. I did a little bit of that in a video on my day trade. So I did a video on, it's actually two videos, day trading options part 1 and 2. And I think in the first video, I really covered what I watch. Even if you're not trading options, watching this would be really good because I cover that quite a bit. And then I believe I also did one for a trend day, how to identify a trend day before the trend day happens. Which would also be more of the what to watch and why. So you should be able to go to YouTube, type in Bullish Bears trend or trend day, and I think you would be able to find that video. Maybe. Which, by the way, while we're here, this looks like a video that Dan made. It might be Lucien, hard to tell. Hey, it could even be Creed. Honestly, it's hard to tell. I did see in the preview the gapper. So there's the pre-market prep routine. There's a ton of stuff in here, guys, all day long. You could just go in and search Bullish Bears. Years and years of videos in here. All right, let's see what we got going on here.